This is Nightly Business Report with Bill Griffith and Sue Herrera.
Hat trick. All three of the major indexes close at record levels, and just in time, here comes earnings season. Will corporate results keep the good times going or throw cold water on the red-hot stock market?
They're back. As the summer months heat up, so are bidding wars for houses. We'll tell you where and what people are doing to try and win that dream home.
And Smokescreen will take you inside the black market for cannabis, where illegal dispensaries openly break the law. It's all part of a $70 billion nationwide illicit market that's crippling the legal industry. We have a special investigation. All that and much more tonight on Nightly Business Report for Friday, July 12th.
Good evening, everyone, and welcome. Well, it was a record run on Wall Street this week. The major indexes breaking through all-time levels multiple times, led, of course, by Federal Reserve Chair Jerome Powell's Capitol Hill testimony midweek, where he signaled an interest rate cut or cuts might be near. In the end, we closed out with triple play of record closes. The Dow rose about 244 points to 27,332. The Nasdaq climbed 48, and the S&P 500 added 13. And closed above 3,000 for the first time. All three indexes were solidly higher on the week.
And while we sit here at record levels, the market will be turning its attention to earnings season, which gets underway in earnest next week. Bob Pisani tells us the one thing that investors must keep an eye on.
Earnings season is officially upon us once again. Citigroup kicking things off on Monday. But for investors, it's going to be all about guidance. Bears believe the second half guidance is going to be cautious and on the weaker side due to slower global growth and trade and tariff issues. What about the bulls? Well, they're arguing that dovish central banks and the prospect of some kind of trade deal getting done by the end of the year, well, that's going to win the day. The problem is earnings estimates for 2019 are basically flattish, but the S&P's up nearly 20%. That means the market's really expensive now. It's pricey. 17 times forward earnings. That's historically high. All right, so bulls, bears, who's right? Traders are sort of hedging their bets. The market believes the cyclical sectors with the global exposure have a high chance of disappointing. And that's partly why energy stocks, material stocks, certain industrials like transports have underperformed in the last several months. Look at Fastenal, for example. These are makers of tools and motors and fasteners. They posted lower revenues and lower gross margins this week. They cited higher costs largely related to tariffs. On the flip side, defensive and domestic sectors with less exposure to the global economy, in theory, should be more protected from the global slowdown. So we're seeing healthcare and real estate and utilities and, to some extent, consumer staples all doing better than the overall market in the past couple of months. The market seems comfortable with these flattish kind of earnings, but those earnings could quickly go from flattish to negative if there is no U.S.-China trade agreement, and it will certainly go negative if tariffs increase. So buckle up, the markets could be in for a very bumpy ride. For Nightly Business Report, I'm Bob Pisani at the New York Stock Exchange.
Let's turn now to Chris Cordero to talk more about what to expect when earnings season kicks off next week. He is Chief Investment Officer at Region Atlantic. Good to see you again, Chris.
Welcome
back. Good to be here. Thanks.
And, you know, Bob mentioned guidance. You think that basically the street is a little bit too pessimistic at this point?
Yeah, you know, the consensus are slightly negative, but I think what's happening here is all the corporations are guiding downward. And so they like to do that to manage expectations, especially after the second quarter. And I think that's probably overdone. So I think at the end of the day, when we get done with earnings season, I think we'll probably see a slight increase. It won't be terrific, but I think it'll be better than it's expected.
But there are companies that you are worried about that you call the detractors, some high-profile companies out there in a pretty broad spectrum of industries here.
Yeah, so obviously a big detractor is going to be Boeing with the 737 issues and problems it have. I also think that Apple is potentially a detractor. You know, it's hurt by the trade war. The other problem too is you're coming through the Apple iPhone cycle, and so sales are probably going to be declining. So those are where I see troubled spots.
Why GM?
GM, I think also on the trade side, and the other part too is realize that when the dollar is strengthened fairly dramatically, and when the dollar strengthens, any corporations that have earnings from overseas getting converted back to dollars are going to be weaker.
All right, so you also gave us a couple sectors that are going to be leaders, financials and healthcare. Why?
Sure. So financials, which is one that people might miss because we've been talking so much about a rate cut. It's not here yet. So the banks are still enjoying that higher federal funds rate on their deposits. So that's going to translate into better business for them. Also, they have a lot of revenue that is based on asset-based pricing. When the market's up, those fees are up. And so that they should also enjoy that this quarter.
I find it interesting that you feel that expectations have been too low for this coming earnings season when we sit here at all-time highs right now.
well, that's what we're sitting here at all-time highs. But I think also there's herd mentality. Once you have corporations start guiding lower, then everybody jumps on board. Right. And so that's what I think's happened this quarter is everybody's jumping on board because you're always a hero if you guide lower and come out on top.
Very quickly, a headwind, the price of oil down 13, almost 14%.
Sure, so that really hurts the energy sector. You know, the price of oil declining really hurts the energy sector, and that's gonna hurt the overall S&P.
Chris, thanks so much.
Thank you.
Thanks, Chris.
Chris Cordero joining us tonight with Regent Atlantic.
Elsewhere, Treasury Secretary Steve Mnuchin today urged Congress to start getting serious about the nation's debt limit, which the U.S. is set to hit later this year. And as Ylan Mui tells us, Mnuchin says time is running out.
Treasury Secretary Steve Mnuchin warned Congress today that the government could run out of cash in early September before lawmakers return from summer recess. As a result, Mnuchin called on Congress to increase the debt ceiling before they leave. Now, if lawmakers don't, the U.S. could be left unable to pay its bills and forced to default on its debt, a catastrophic scenario that both sides say they are determined to avoid. Now, Congress has been at work on a broader deal that not only lifts the debt limit, but also increases the caps on federal spending to prevent painful budget cuts. Previously, they thought they had until late September or even October to reach a deal, but the warning from Treasury has set off a scramble to get the job done in just a few weeks.
We're having our back and forth conversations, but we understand the value of that. We also understand how important it is for us to lift the caps so that we can meet the needs of the American people, and we're having those conversations at the same time.
There have been a flurry of phone calls between Mnuchin and Pelosi over the past 24 hours, and they both say they do intend to honor the full faith and credit of the United States. For Nightly Business Report, I'm Ylan Mui in Washington.
Ford and Volkswagen are forming a partnership to develop and build electric and autonomous vehicles. The goal, save millions of dollars, maybe even billions, making advanced cars and trucks that won't hit the street until 2023. But will it work? Phil LeBeau has more from New York City.
The CEOs of Ford and Volkswagen call it a win-win in the expensive race to build electric and autonomous cars. Ford gets access to Volkswagen's EV platform. VW gets access to Ford's autonomous vehicle technology and is taking a stake in Argo AI equal to Ford's, with both automakers expecting to save hundreds of millions of dollars.
If you share a technology which might cost you still 5 to 10 billion, if you share that, you get it just cheaper. And I think it's relatively easy then to decide where we're going to use it.
The deal is the latest example of automakers pooling resources to tackle an expensive problem, making self-driving vehicles that will someday pay off. GM is working with Honda and others on its subsidiary Cruise. Meanwhile, Nissan Renault will work with Waymo to build self-driving vehicles for Japan and Europe. The question is whether these partnerships will pay off and whether the two automakers can truly make this partnership work.
Early, I saw the chemistry between the two of us. There was a humility from both of us about these kinds of situations and how we could learn together and make progress.
The first electric vehicle developed by Ford and Volkswagen is scheduled to roll out in Europe sometime around 2023. By then, both automakers believe that they will be garnering major savings, which will help them as they steer through an uncertain time in the auto industry. Phil LeBeau, Nightly Business Report, New York.
The dull days of summer may be over sooner than expected in the nation's housing market. The supply of homes for sale, which had been increasing, could turn lower again soon. And that will likely mean the return of bidding wars. Diana Olick has the details and the strategies.
After a year of searching for the perfect Northern Virginia home, Taylor Frank and his wife finally found it and so did 6 other buyers.
We knew we were going to have to come in pretty hot, and that's what we did.
They waived all contingencies and even offered a bit more than they thought the house was worth, which was risky.
If the appraisal had not come back at a price similar to what we ended up paying for it, we were going to have to pay that cash out of pocket, which we didn't really want to do.
Bidding wars like this had been slowing dramatically thanks to more listings nationally. Just 12% of offers written by Redfin faced a bidding war in June, down from 52% a year ago. But now the supply of homes for sale is not growing as much, and housing demand is rising as mortgage rates sink. So bidding wars are coming back. It's especially competitive in more moderately priced markets like Oklahoma City, Richmond, Memphis, Buffalo, and Atlanta, where supply is now significantly lower than a year ago.
A lot of our clients looking for is what everybody else is looking for.
Even in pricier D.C., where Beecher works, the supply of homes for sale had been up 24% in January, but now is up just 7%. So he is coaching his clients to make sure they are ready financially.
We always tell our clients to look in the mirror and not out the window. That means understanding your financial capacity first.
And ready to sharpen their bidding tactics.
Some of our buyers will research the sellers on LinkedIn, try to find some type of personal connection that they can have. And when writing a letter to accompany their offer, they're looking to make some detailed and personal connection or compliment about the home.
And the letter can't just be, I love the house. You have to have a narrative, project the arc of your life and how the house fits into it. And don't be too cheesy. And no pictures. Those can cause legal issues.
That does run the risk of a possible fair housing violation.
Frank and his wife wrote a letter saying they wanted to start a family in the home. Turns out the sellers had done that too. Perhaps why the Franks won the home. For Nightly Business Report, I'm Diana Olick in Washington.
Coming up, record levels don't seem to scare this week's Market Monitor because he has 3 Dow components he says you need to own. Amazon's annual sales extravaganza, Prime Day, is almost here again, and it seems to get bigger every year. The company's Prime Day kicks off at 3 a.m. Eastern Time Monday, and it runs for 48 hours, up from 36 hours last year. But while Amazon may have created the day, Courtney Reagan tells us hundreds of rival retailers are offering competing discounts, too.
July used to be a quiet month for retail, not anymore. Prime members in 18 countries, one more than in 2018, will be able to shop more than 1 million deals, some of which will be available only for part of the 2-day event. Amazon doesn't release exact sales figures, and while it's still a smaller online sales day than Cyber Monday or Black Friday, analysts are still projecting a big day.
We could see a 50% bump up from last year, so something in the $6.3 to $6.5 billion. The membership and subscription fees that a Prime member is paying to Amazon is up almost 25% each of the last 2 years. And I think that's going to continue with the different offerings that are out there. Again, Kindle, Audible, the subscription boxes that are starting to pop up on the site.
Estimates for the number of U.S. Prime households range from around 60 to 100 million. Since you have to be a member to get Prime Day deals, Amazon uses the event to attract new signups.
It's a recruitment vehicle, recruitment for Amazon to get people to sign up for Prime. A lot of what they feature will be the Alexa-enabled devices to get you hooked on that and all their other services.
Prime members are valuable. One survey shows Amazon shoppers that are Prime members spend more than double what non-Prime Amazon shoppers spend in a year. Prime Day isn't just a big day for Amazon either. It's created a halo effect for rivals. eBay, Walmart, Target, Macy's, Best Buy, and many others have competing deals. In fact, Target says Prime Day 2018 was one of its biggest digital days of the year. This year, Adobe Analytics predicts large U.S. retailers could see sales surge 79% compared to an average Monday or Tuesday in July. And if Amazon's site crashes again this year, like it did for ours last Prime Day, that opens up even more opportunity for competing retailers. For Nightly Business Report, I'm Courtney Reagan.
Oracle loses out on a government cloud contract, and that's where we begin tonight's market focus with a federal judge dismissing Oracle's allegations that the Pentagon's bidding process for that $10 billion cloud computing contract was tainted by conflicts of interest. What this means is Oracle is now eliminated from the process, leaving just Amazon and Microsoft to compete for that contract. Oracle shares were down a fraction today to 59.81. Both Amazon and Microsoft shares were up a fraction. The parent of Budweiser, AB InBev, is now delaying its IPO in Asia due to weak investor interest. It was expected to be the largest IPO of the year, raising nearly $10 billion. AB InBev fell more than 3% on that news to 86.94. And the Justice Department has reportedly opened a criminal probe into Johnson & Johnson. Bloomberg reports that a grand jury is looking through documents to see if the pharmaceutical company had any knowledge of possible cancer risks from its talc-based products. Johnson & Johnson has repeatedly denied that those products cause cancer. The stock fell more than 4% today to 134.30.
United Airlines will now be extending its Boeing 737 MAX groundings until early November. The carrier plans to cancel about 2,100 flights in September, 2,900 flights in October as well. The shares were up nearly 2% to 91.23. Shares of Illumina fell after the genetics company lowered revenue guidance due to problems with its direct-to-consumer market and lower sales of its sequencing systems. Illumina fell more than 16% to 305.05. The industrial equipment maker Hillenbrand is buying plastics maker Milacron for $2 billion. That move will expand Hillenbrand's portfolio into plastics technology. Milacron soared nearly 24% to $16.75. And the Federal Trade Commission reportedly has approved an estimated $5 billion settlement with Facebook over the social media company's privacy issues. The investigation centered on reports that nearly 90 million Facebook users had their data improperly accessed by the political research firm Cambridge Analytica last year. Facebook rose about 2% to 204.87.
Time for our weekly market monitor. He has names of growth stocks that he says can weather the latest market volatility. This is his first time on the program. We welcome Greg Hahn. He's President and Chief Investment Officer at Winthrop Capital Management. Greg, good to see you. Thanks for joining us tonight.
Thank you.
And as it happens, these are all three Dow components. We start with Disney. Now, I can imagine that people are not going to exactly buy it for the yield because it's only 1%, and the stock is at an all-time high right now. But obviously, you think there's more growth there to be had, yes?
Yes, we've weathered the storm with Disney, but it's at a critical turning point, and we think the potential now with Disney Plus and the growth in the subscriber base is going to be meaningful not only for revenue growth but also for their operating margins.
Next on the list is Nike. You say their revenue growth is accelerating. The stock has done pretty well, up about, let's see, 15, 16% for this year, but you still think there's room for more.
Nike's a shift in an apparel company to almost a technology company. So their move into this direct-to-consumer marketplace and being able to buy direct and still balance the traditional retail distribution is going to be, I think they can manage it well. And that's a huge growth opportunity. And the other thing is the 2020 Tokyo Olympics will be a big catalyst for sales.
And finally, Cisco, you like this one. It's been in a tough category lately, but it has done well in the last several months. And they just made a huge acquisition this week, $3 billion as well. What do you like here?
So this was a recent addition this year. And we really, we built it because of the 5G play out. We're looking to make a play in the 5G space. But we also like their position in cloud technology. So the acquisition of Acacia Communications helps build out the fiber optic piece, and it also gives them an entry point into China, which up to this point, they really have had a minimal exposure into the whole China market.
As Bill mentioned, we're sitting at all-time highs. I mean, it's been a record week. Do you think this market has substantially more to run, especially if the Fed does cut rates?
Yeah, so our whole thesis this year is actually declines in earnings growth. So we are pulling risk out of the portfolio. These are three ideas that we have that we really like because there is catalysts for earnings growth. But throughout the market, that's not the story. It's really try to button down and play defense going into the second half of the year.
Very good. Greg Hahn with Winthrop Capital Management. Again, thanks for joining us tonight, Greg.
Thank you.
Investors are calling cannabis the new gold rush, but there is a brazen illegal threat to that booming industry. Up next, a special investigation, weed killers.
The booming business of cannabis is what many investors have been calling the new gold rush. But with those potential riches comes this reality. There's a much bigger boom in the black market for weed that is crippling legal sales. And as a result, only a fraction of total cannabis demand is being met due to the illicit market. So what's really going on inside unlicensed dispensaries which play by their own rules? Melissa Lee has a CNBC investigation tonight, Weed Killers.
It's a weekday afternoon in Los Angeles, the epicenter of cannabis in the United States. This busy dispensary is open for business. Hi. But if everything looks normal, it isn't. This is, in fact, an unlicensed, illegal dispensary, part of the booming black market in California and around the country. It's what the cannabis industry says could be the biggest threat to sky-high expected revenues.
The legal cannabis market in a very short period of time was going to grow from zero to somewhere in the neighborhood of $50 to $75 billion.
That optimism faces this reality, an estimated $70 billion in illegal marijuana sales nationally, 7 times the legal market. Case in point, California. Early projections of more than $1 billion in annual cannabis tax receipts in 2018 are far from the $345 million collected. That's in large part because the illegal market can easily undercut the costs of running licensed dispensaries. It's not hard to see how.
You guys ready?
Yep. Yeah.
Okay.
Yeah, all right.
Go.
A team of CNBC producers equipped with hidden cameras visited 10 illegal dispensaries throughout L.A. Most aren't hard to find, and they're open day and night. They all have one thing in common. They are brazenly breaking the law, operating with no license, selling potentially untested products, and allowing customers to openly consume. In this illegal dispensary down the street from the University of Southern California, customers are dabbing, smoking a highly potent cannabis concentrate. And if you want free weed, this store and others were happy to give it away. As the signs say, all you need to do is write a positive review on Weed Maps, an online site that lists both legal and illegal dispensaries around the country.
If you do okay, right here, right here, on Weed Maps, you get a top shelf deal. Okay.
Despite a daily limit on the amount of cannabis stores can sell to a customer, you can buy as much as you want at many of the illegal dispensaries.
So, but we can get as much as we want. There's no limit.
We do not buy anything from the dispensaries.
The black market is a huge problem. In some states, it's 70 to 80% of sales, and it's a big threat. And so a lot of states are thinking about how do we alleviate it. The two things is price and convenience.
And nowhere are legal operators feeling the impact more than in California, the country's largest legal cannabis market, where voters passed Proposition 64 in 2016. Businesses had to be in compliance with a license by January. That clearly didn't happen. We showed a compilation of our video to Los Angeles City Attorney Mike Fewer. Any surprises to you?
No. I know that there are unlawful dispensaries operating in the city. It might be that some of the locations you just showed me are under investigation right now.
How big of a problem is this?
It's a very significant problem. And from a public health and safety standpoint, it's especially crucial that buyers of cannabis only go to the licensed shops.
An illegal store can rake in $10,000 to $20,000 a day, authorities say. So far, 151 illegal dispensaries have been shut down, with more criminal prosecutions pending. None of the illegal dispensaries we visited responded to our request for comment. The danger in these illegal stores is potentially unregulated products, like these, sold to unsuspecting customers. Legal dispensaries are required to sell regulated products which are tested. This is exactly why legal store owners like Cameron Wald, Executive Vice President of Project Cannabis, is outraged at how bold the black market has become.
We're facing, especially in California and LA specifically, an illicit market that is extremely strong. We're outnumbered 3-to-1 illicit operator to legal operator. So, we have outrageous price compression that we have to see at our stores.
How much easier do you think it is to operate as an illegal dispensary compared to what you go through?
It's a lot easier. They have no compliance standards. They had no permitting process. They had no documentation, no legal process that they had to go through.
So they're breaking the law, potentially threatening the health of consumers, and they're threatening your business.
Correct.
And they're doing this in plain sight.
In plain sight.
And as we found in all the dispensaries in which our cameras captured illegal activity, it appears the boom in the black market in cannabis isn't going away anytime soon.
There are currently 186 licensed dispensaries in Los Angeles, with more than 250 illegal ones, according to the police. But realistically, no one really knows the exact number. As far as Weed Maps, that company tells us it provides a valuable service to the cannabis industry.
Before we go, here's a look at the record day on Wall Street once again. The Dow rose about 244 points to 27,332. The Nasdaq climbed 48, and the S&P 500 added 13 and closed above 3,000 for the first time. All three indexes solidly higher on the week.
That is NBR for tonight. I'm Bill Griffith. Thanks for watching.
I'm Sue Herrera. Have a great weekend.